righty. All right. And today, in the last stretches of the year here, this Monday, November 3rd, should be a pretty interesting week. Not the Democratic Party that my parents were in. You know, the party of JFK and whatnot. I don't know how the hell anybody votes for these people. You know, look, the Republicans are not that much better, and I'll be the first one to admit that, you know, and I'm not really a fan of Jack Ciattarelli. Never was, even the last two times he's been. But, you know, hey, I figure anything's better than putting another Democrat in there and seeing what in the hell is going to happen. You know, that's my attitude about it. So anyway, with that being said, I think it's going to be an interesting because I think you'll likely get the end to the shutdown this week because I think I think Democrats' whole MO was that they were going to shut the government down. I don't think they thought it was going to go this long. But I think their whole intention was to impact these elections coming up. I really do. You know, they're like that. They're fucked up, folks. I don't know how. And when I hear these people, I'm like, you know, you're really thinking that this is like the Democratic Party of even Bill Clinton. You know, Bill Clinton wasn't even remotely close to where these Democrats are today. So I don't get it. I don't understand. But anyway, needless to say, we'll have that in the rearview mirror, which will be cool. But there's quite a few big earnings this week. We did have Amazon. And as I mentioned, I actually did that strangle. What I had done with that position, I had actually dumped my put side of that contract because it was almost worthless. And so it worked out. And then seeing where the price action was going on Amazon, I decided to kind of hang on to the other side. Now, as I mentioned, what I did was I kind of did a twofold. I did a strangle. I did a 250, 200 strangle. But then I had also done, I sold that strangle, but then I also done another strangle outside, which I bought. So in a sense, I kind of did an iron condor, but did it really, really wide. And the reason I did it as two different trades is so that I could do this exact thing that if you know, because what I found is when I do extremely wide, so I'll put this one up just for argument's sake. When I normally do extremely wide iron condors, and I want to get rid of this. I wanted to get rid of this so this doesn't show, just so I can demonstrate here. Because what normally happens when I do really wide iron condors, like $30 wide, which is what this was, 30 on one side, and I think it was 40 on another. Generally, it kind of turns out to be more of a nightmare when I try to close it than doing it as two separate trades, then rather than doing a strangle. And so what I had done is here, I had the strangle, so I had a 250, 215 is what I had. This actually came in. And then I had also, and I did this as one trade, and then I also went in and did it 185. I bought a 185, 280. Okay, and that is actually the trade that I did, but I did it in two pieces. So if you look at this on the curve, this is actually the trade that I did, but I did it in two trades. So I did this one, and then I also had done this one outside. I got rid of this part here. And let's do this just so I can demonstrate. And, I know there's people who are like, oh, well, why did you do that? Blah, 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 blah. And again, the reason why is, look, I don't like doing strangles on big stocks like that because you look here, the margin hit is usually thick. And by doing that, I actually reduced, it was still thick even if I would have done it this way. But it's about managing the trade. When I wanted to get rid of it, it was a lot easier to get rid of this half. And I could have just gotten rid of this half if I did it as an iron condor. But my intention was to, if it came in, was just to get rid of this strangle and then just let this go and expire worthless. And my feeling was, hey, look, if this came in on the day of expiry, day of earnings, I get rid of this. I take my money and I go home, and then I keep this. And if it keeps going in the direction that, if it keeps going up, quite possibly I could make some money on this call. And if it went down, I could make some money on this call. But it really didn't cost me anything because that trade as a whole, by itself at the time. So if I deleted this, and it's probably around the same price, it only cost me 83 cents. So anyway, that's the thinking, right? Because I did it as two trades because I had every intention on selling it as two different trades and not doing as one. That's why I had done that instead of doing an iron condor. And it's working out so far because, again, this is out of the money now. It's got another 18 days, which I'm going to hang in there for a little while. It's uncovered, so I don't have to worry about, if it does wind up blowing up in my face and Amazon continues to run, that's going to suck. But if it doesn't, and it just kind of hangs out here for the next week, the premium on this is going to collapse a little further. But then you can see here, I also have a number of longer term options. Here I'm 74 days out. I'm out in January. I got a 250, 255. You can see that one's come in pretty good. Here I'm way out next year in June. I'm out in December. And these are all seem to be working out. I have time on my side. I'm not really worried about those anyway, because those do have time to kind of marinate. One of which right now is the only one that's technically out of the money is this one that's 74 days out. So I do have some, I'm not totally concerned, but I do have a little concern about that because that one's only got 74 days. Anyway, that's why I had done what I did with Amazon. And I'm likely going to do similar things with the ones that are coming up for earnings on this week. Also with Meta, I did kind of do a little dip buying here. I went out to Dees. I already have some Dees already. You can see this one's kind of getting beat up. But this one actually worked out okay so far. I may actually do a little bit more dip buying today. I don't, it looks like it's up about what? Looks like it's up about $5 today, so I might not do anything. But on another, if it does get hit a little bit, I will buy a little bit more of the dip in Meta. Also did the same thing in Microsoft. You know, I saw these get hit. Now, these two don't seem to be working, and I did go out, you know, way out in time. Again, December. You can see all my stuff here is in December. I'm like going way out. I'm giving myself time. And I went out of the money. These weren't out of the money when I put these on, but now they are. And so I went out in time, and I also went out and purchased a couple that were out of the money. You can see I didn't spend a lot of money, $163. All right, on that. And then I'm giving myself a decent amount of time. And so those are kind of the stocks that I kind of gobbled up there on those big downward trends. So anyway, that is kind of where I sit now with those. I got rid of Starbucks. I was sitting on a loss on that one for a while. I got rid of Starbucks. I had a put spread. It was actually pretty far out there too. I was actually out in April on a put spread, and I was in a 95.90, and it just, I don't know. Starbucks just has been an absolute piece of dog shit. And I was going to dip buy on this one, but just wasn't feeling it. And I'm glad I didn't, because it actually tanked a little further. And I think the problem with Starbucks going forward is not so much, you know, it is a little bit competition, I would think. Too, there's a lot of competition out there now in the coffee space. But I think their problem overall is kind of more social than it is anything else. And the reason why I'm picking up on that is just recently, one of these 7 Brews opened up in my town, and the Starbucks near me literally had the busiest location in the entire state of New Jersey. I mean, it was a fact. I mean, when they opened up, it was the busiest, and I can attest to that, because anytime I drove by this place, there was always literally a line around the corner, you know, and 100 assholes waiting in line to go get a fucking coffee. Hey, you know, whatever turns you're on, that's you know, that's what you want to do, that's fine with me, whatever. But anyway, the place is busy. But the minute this 7 Brew place opened, literally that place is dead. It's dead as a doornail now. And the 7 Brew is a drive-through. And look, I don't think their coffee is probably any better. And look, it's all the same shit, right? They're all using the same sugary crap to mix the drinks. Like, let's face it, they're all getting from Cisco and American Food and Kraft and, you know, wherever they come from. All this sugary shit's coming from the same damn places. And, you know, as far as like what coffee they're using, I don't know if they use their own blend. I would assume they probably do, but it's probably a private label type of thing. Anyway, needless to say, that place is jamming and the other place is dead. So what that tells me is that they're not getting new customers, right? They're not expanding their customer base. I'm talking in the coffee business. Literally, they just stole customers from this location that's right down the street. And so what that tells me is that there's more of a, I guess, effort to kind of dog on Starbucks and go to this place. And, you know, I don't think it's going to make this other place do, I mean, in the short term, it's probably this place is going to do really well. But, you know, long term, you know, it just tells me that these people are sheep in this entire business, and that in the next place that opens up in a year, that's a coffee place, will do the same thing, and that same group of assholes is just going to go right down the street because, oh, it's new and it's better, and you know, and they got different sugar or whatever it is, and you know what I mean. They're giving out T-shirts, and you know, and to me, it just tells me that, you know, I guess the story of it is that I think this market is saturated. It's saturated because they're not generating new coffee drinkers. They're just stealing customers from other establishments. And so to me, that's not a for them, for Starbucks, that's just not a good trend to have. And so anyway, that's kind of where I'm at in Starbucks, and that's why I was like, you know what, I was going to dip by on here. It's kind of near year lows. I think the year low here is what, 75.50. I don't think it's really a good time here. I think this thing actually breaks these lows, and I think this thing does go down below 70. And that's just my opinion. And if it does, like I have these lines on here from way the fuck back when, you're looking at real support here going back 10 years or 5 years here on this. And, support I have down here at 70.21, and I did a breakout trade. This was a long time ago when it did break out over 80, right? That was the breakout. And here was the breakout. And so now the trend is completely in the other direction, and I don't know really where the bottom is. And I have zero faith in this thing. Get rid of that. So that's kind of my thing on Starbucks and why I'm not buying the dip, because I don't think the dip has fully dipped. I think it's going to keep dipping, and if that's the case, some people say, well, why don't you short it? I don't think really it's not really shortable. I mean, look at this IV rank. It's 23.7. And if I do something, I don't know. I'm just not feeling it. Like, because even if it does go down, I don't think it's going to be a collapse. And I don't think it's going to happen fast enough for me to be satisfied. And so with that being the case, I don't think I could really get into a trade where I would actually feel comfortable even shorting it. And that's kind of where I'm at. So that's why I kind of bypassed Starbucks. So that's kind of the story there. And so, F Starbucks for now. So now, as far as some other things going on, I think Palantir has earnings this week. Unfortunately, the IV rank in Palantir here kind of sucks. Not real happy with that. So I don't know if that's really going to be in play or not, in my opinion. I actually don't think it's going to be in play. Because of that, IV rank of 34 just doesn't intrigue me on a $200 stock. If it was in the 50s, I'd probably feel a little different. And, I don't know if I really want to step in front of this anyway, one way or the other, given that, if you do look at this thing, it has been just an absolute juggernaut this year. And I think it's quite possibly, I don't know for sure, but it quite possibly is one of those stocks this year. I think it might be one of the best. I think it might be one of the best performers this year. It's quite possible. I'm not sure. I don't know. I don't really care about that stuff, honestly. I mean, to me, it's like, who cares? That's like shit they put on CNBC to make headlines. Like, he's the number one performer. Yeah. Oh, and let's talk to Joey Bag of Donuts, who's got, he's a portfolio manager for some shitbag firm out of Weehawken, and let's see what he says. I don't give a shit about that. I don't give a crap about that. And then again, more importantly for earnings, I'm not gonna dick around with this and seeing where these. Look at this volatility in here. It's terrible. It's not even historically high at all. You can see this thing was running up in the 50s, which to me would be perfect for this. But an IV rank of 34.6 here, meh. It has been a good trader though. Meaning that it has been a good stock to trade. It's really liquid as hell. I mean, look at the strikes in here, and you look at the open interest up and down the chain. So, I mean, if you do want to do something, you have plenty of liquidity in here. I mean, all up and down the option chain on both sides. Obviously, a lot of call skew. I mean, you could see at the 200 strike where we're sitting right now, 33,000 contracts here in November. So a ton of liquidity on this stock. And so, I mean, if you do want to do something, be my guest. I think you're probably in good shape, at least liquidity-wise. But otherwise, for a trade, I don't really think I can really do anything in here other than what I'm already in. I'm in a couple of I think I'm in a call spread. Yes. I'm in a call spread that is extremely in the money and way out. I'm out in August. So I'm out 291 days there. And it really hasn't come in. You'd think this is $50, almost, $40, $50 out of the money or in the money. And you would think that some of the intrinsic value of this would have come in a little bit better, but no, it hasn't. But my guess is if earnings come out okay, and it pretty much stays around this price, that will probably come in a little bit stronger after earnings. But we'll see. We'll see. So there's that. There's Palantir. I think is MSTR another one that has earnings? Let's take a look. I haven't really traded on this one. No, they don't have. I think they had earnings already, MSTR. Let's go into all earnings. And let's go into here. And let's take a look at that. Okay, here we go. And a couple of these I don't even really have interest. I actually own some ADM. You can tell that by the little dot there. But this one, I don't know. This one never really had much. If you can look up and down the option chain here. Sporadically, there's some strikes. But overall, not one of your better trade vehicles at all. I really don't have any interest in that one. As well. Cisco. Let me see. For some reason this isn't. Oh, there we go. That's a better list. Public service, that comes today. We talked about Palantir. Clorox, another one that's not very liquid at all. It doesn't even have weeklies. But there is some open interest around here, which I'm actually quite surprised about, but it falls off otherwise. And then really not. Ivy rank of 58 is a little interesting, but I believe their earnings might be already out. Let me just take a look. They might be already out. Oh, it's after the bell, so they come out tonight. I don't think you can't do anything in here. There's no. I mean, you're looking at what, a $6 move. You can't do nothing. I mean, and there's the one standard deviation strangle. Even if you did an iron condor, it's still. You have to go out here like this. And that is actually the greater than one standard deviation. And you're not getting dreck. You ain't getting nothing. 25 cents? I think so. That's for a greater than one standard D. If I did anything, I'd probably do that. I'd do the 125, 130, 105, 100. Let's look at the curve. I always like the curve. Always like the curve. You got to have the curve. You've got to have the curve because it just looks cool, right? I mean, that's what makes this platform better than all these others, is that you get this. This actually is nice. Yeah, I don't think I can do anything there. I'm not doing that. That sucks. I mean, it looks good, but you can't do anything on Clorox. Let's see. WMB. I talked about AMD. I don't think you can do anything there. Don't think you can do anything on AMD. Just not enough real liquidity there, in my opinion. Let's see. Tomorrow, Yum. I don't really trade Yum. 50 IV rank isn't bad. No, absolutely no liquidity on that thing either way. Ball Corp is another sleeper. MPC, TAP is another sleeper. Yeah, it's a sleeper too. Really not, I mean, even though they're like big names, there's not really much. Pfizer, there's not much you can really do here in Pfizer. You probably have a decent amount of liquidity, and you do up and down the option chain for sure, right? 48,000, 31,000, 20. So you do have, 7K, 14, right? So you have some options here. Only problem is that on a $24 stock, what are you really going to do? And an IV rank of 30, I don't know how that rates. Yeah, it's about, it's generally elevated from where it has been. Volatility in this has been basically non-existent. And so it is generally elevated. It was a lot better earlier in the month, last month. But it is elevated. But the only thing you can do on a $24 stock is you can either A, sell puts, which they're not paying you direct, because it's a $24 stock, or you do a covered call. Or maybe you do the poor man's. Now, I had Pfizer stock, and I had it for a while, and I know I was selling calls on it, and I know for a fact that I ended up losing money on it. Because I think I bought a covered call back in 22 or 23, near $30, and I was rolling it, and finally I gave up on it. I was like, this thing's just a piece of crap. And then people will say, well, honey, why don't you hang in there for the dividend? I'm like, I don't give a shit about it. I own 100 shares. What was I going to make, $25? You know what I mean? $25 a year. It's like, yeah, okay. I want hang in there for the dividend. Like, I don't give a shit about the dividend. You know what I mean? Stop. If I had 1,000 shares, then maybe I'd worry about the dividend, and hanging in there. But you know what? The dividend and it going down is not going to make me hang in there because I got a dollar called that. Screw off. Fuck that shit. So anyway, needless to say, yeah, the only thing you can really do in here, if you're going to do something for earnings, would be to do a covered call because the margin's probably pretty good, and I would actually probably go out further than November. I would probably do January. I would probably do a January 25 covered call. I think, yeah. That's, I think, where I would go. Right? So buy the stock, sell the 25, get your cost basis at $23.72. If it gets called away at 25, you lock in $125. Have a nice day. Right? To me, that's not bad. Do the math on that return, and then I'm only using $1,100. So, do the math on that rate of return, and if that happens by January, which is not even 3 months, you're talking that's a pretty decent, that's like 20% change, right? 20, 28, like high 20s, right? If I were to do the math right. So yeah, hell yeah, that's a hell of a trade. And then you're going to get 100 people who say, well, if it keeps going up and it gets lower, well, you know what? Well, if it keeps going up, then it keeps going up. But I made my money, and so I don't care, right? That's fine. And if that's good for you, then, but if it goes down, right? If it goes down, then what can I do? I can keep rolling my call down and keep collecting premium, and then doing what? And doing what? Reduce my cost basis until it does eventually go back up and get called away. So yeah, that's probably all I would do in Pfizer. And I actually I kind of like that. And that one's before the bell, so I'm going to have to do that one tonight. So I actually like that one. And I'm not really a fan of Pfizer. But again, this is putting my cost basis well below where it is. And if it does get hit, it would actually be a good trade, in fact. So there you go. It's a little covered call on Pfizer for earnings, Pfizer. You probably could do, I don't know if I'd really be a fan doing, I really wouldn't be a fan here doing like a poor man's covered call, like where you kind of go deep in the money, right? You buy a fairly deep in the money option close to 1 delta, usually 90 or better, I think. I don't really know the rule of that, but I believe it's something like 90 or better. And then buy another. And so the reason this is a poor man's covered call is like you're technically giving yourself, so without using a lot of buying power, you're basically buying 50 shares of stock, right? Your delta's 56. So I'm buying 50 shares of stock, or controlling what appears to be 50 shares of stock, and I'm only doing it for $300. But the downside to this one is it's got to go up. And then you could do that, and that kind of equals, to me, that's kind of like the same trade, even though it's a different strategy, because your max profit is what, 194, and the other one I was looking at what, 125, 130 bucks. So it kind of, the profitability is kind of the same as well. So anyway, either one of those wouldn't be bad, depending on your capital. If you don't have the capital, do the poor man's covered call. Or if you have the capital, do the full-blown covered call. All right? All right. You ain't getting this stuff on TikTok. All you get on TikTok is, I got a funded account, and and I made $4,000. Like, no, you didn't. And you don't have a funded account. It's not real money. It's fake. And unless you're pulling money out of it, dude, or women, I see more women now actually going on social media talking about their trading. Look, if you really made that money, I don't care that you did it in a funded account, wherever you did. Unless you got a payout, show your payout. If you got a payout on that, then fine. Then it's money. Then it's real money to you. Otherwise, if it's just in some fucking bullshit Apex or Top Step account that you're showing some profit in, if they didn't cut you a check for it, it ain't yours. Face it, it ain't yours. It's funny money. So, grow up a little bit. You want to act like a trader, act like a trader. Don't act like a Johnny come lately. Anyway, AMD. I'm definitely going to play AMD after the close tomorrow. So we'll probably talk about this one more tomorrow, but I'm definitely going to do something in here. And I'm likely, and it's going to be against my better nature, I'm likely going to do this one, is the 215 Strangle. I really like this one a lot. The 215-30 Strangle. Look, it's not for everybody. Buying power is about $2,600. Great premium on this one. I would hope that I can do this one for probably over $8 by the time this comes around. I think more importantly about this trade, which is really makes it juicy, is this number right here, is this theta burn that you're going to get on this. Because it's the November expiry, right? You got elevated volatility because of earnings. It's AMD, so it's in a sector that's, right now that has generally been running at higher volatility. And, that sort of thing. And 76% probability of profit. And the beautiful thing about this, look, if you don't have the money for this, you can definitely do you definitely have the opportunity in here to do what I call kind of the poor man's strangle, which is you do like a 10 wide or even a 20 wide iron condor, and you cut the margin in half, right? So you're literally you're literally cutting that margin down by almost $1,000 or so, doing the 20 wide, but you're still giving yourself a lot of theta in here, and you're still over 70%. You can also, if you don't even want to go that wide, you can do the 10 wide, which is really all you can do in here. And that one still puts you in a really good space. Buying power 748. You can bring in over 250 and you're still near 70%, 67%, which to me, and your theta is pretty good being over 10 in an iron condor. So you got a lot of options in here to do on this if you don't want to do the strangle, but I do like those two strikes. I think you need to kind of, depending on where it is, where the stock price is today, let's face it, a lot can change by tomorrow. But based on where the stock price is today, I like these two strikes, 300, 215. All right. And so there's AMD. And now the reason why I like those strikes, just look at the open interest there. 215 has a decent amount. I mean, 220 is definitely a lot better, right? 2,000, but still, again, there's a lot of open interest there, and you pretty much have that up and down the option chain here. This is a very liquid stock, so you don't have an issue with that, which is great. Which is you can't beat that. All right, and so that's really it as far as, because I don't think I'm going to be playing any of the others for earnings. I know Super Micro has earnings, but IV rank of 25 doesn't do it for me. And these are all for tomorrow anyway, so I'm probably not going to talk about those today. So really, that's it. That's all I got. There's a few things that are moving today. We got like SanDisk, Micron, Seagate, and Western Digital, all memory and storage companies running today. I don't know what the reason is, but I'm sure it has something to do with the China trade deal or something else. I see NVIDIA's running today. So it looks like anything tech, memory, that type of thing is actually all running today. All right, and so that's all I got. Have a good one, and we'll be back hopefully tomorrow.